three additional ratios added in the syllabus. Yes, Ayushi, bolo.
मैम लाइक जैसे वो थे जो लिक्विडिटी रेशियो सॉल्वेंसी रेशियो मैम लाइक इसका कोई हेडिंग नहीं है इन रेशियो
है Ayushi. Debt to just a second. Debt to capital employed ratio. This comes under solvency ratios. Okay. Second one is fixed asset turnover ratio. This comes under activity ratio. Okay. Third one is net assets turnover ratio. This also comes under activity ratio. Okay, Ayushi, clear?
Yes, ma'am.
Now let's come to each of the ratios. Let's understand it. The name is given debt to capital employed ratio. So it's a good thing the formula resembles the name. Okay, it will be easier to remember. Now just let me write the formula equation. Formula is long-term debt divided by capital employed, or you can also call them as net assets. Okay, Ayushi? So what does the long-term debt includes? Tell me, Ayushi. We had already studied this lot of ratios in the when we write long-term debt. What does that come under long-term debt? Ayushi.
मैम
Hmm.
मैम नॉन करंट लायबिलिटी
Correct. Under the non-current liability heading, we have two things. All the two things comes under here. That is long-term borrowings. Okay. Long-term borrowings plus long-term provisions. All right. When sometimes we only write non-current liabilities, that is correct. But we sometimes forget that the long-term provisions come under there and we have to add it if given in the question. All right, Ayushi. So therefore, I prefer to write it long-term borrowings plus long-term provision so that we don't forget that long-term provisions will come in the long-term debt. That is the only reason. Clear, Ayushi?
Yes.
Now the denominator part, capital employed. What is the capital employed, Ayushi? We had also studied this part in the previous ratios. Asset side approach and liability side approach. Do you remember now?
Yes, ma'am.
So under the asset side approach, what we do? I think we do total assets minus current liabilities, or also I can say it non-current assets plus working capital. Is that correct, Ayushi? They are all same. It just sometimes questions give you total assets, sometimes they give you non-current assets, and like this. So you should just familiar like all those things conclude to the same point. All right. Now, under the liability side, just a second, I'll just put it under heading so that it is visible properly. Okay. So liability side approach, what will be our entry? What will be our, you can see from above. It will be shareholders funds plus non-current liabilities. And non-current liabilities include long-term borrowings and long-term provision. Is that correct, Ayushi?
Yes, ma'am.
Alright.
And like for asset side, we can like total asset minus current liability भी हो सकता है, even non-current.
Ayushi, फिर से बोलो, मेरे को ठीक से सुनाई नहीं दिया.
मैम एसेट साइड अप्रोच में टोटल एसेट माइनस करंट लायबिलिटी भी हो सकता है, नॉन करंट एसेट प्लस वर्किंग कैपिटल भी हो सकता है.
Correct. Yes, both the options are same only. It just depends that what data has been given in the question. All right. Okay, Ayushi. So debt to capital employed ratio is one of the solvency ratios. So solvency ratios help us identify the long-term solvency position. That is, whether in the long run, the business will be able to pay off their long-term liabilities or not. Is that correct? So when we are calculating long-term debt divided by capital employed, we are seeing that out of the uh, out of the money invested in the business to run the business, how much is the share of the long-term debt? Can you tell me whether it will be lower the better or higher the better? What will be? Whether you want a larger part of the debt in your capital employed or whether you want a lower part of debt in your capital employed. What do you say?
Higher the ratio will be better.
What, Ayushi?
Mom, higher the ratio will be better.
No, Ayushi, we had studied debt equity ratio where we had studied if it is a higher debt, that means it is a higher risk. Have I not explained you all those parts?
Yes, ma'am. Yes, ma'am.
So,
2:1 is considered
a
close.
good amount, a balanced amount is good for business. Okay, if you don't have any amount of debt, then yes, there is not risk, but then it also hinder the growth of the business. All right, so we need debt for a growth purpose. But if you are having a too much of debt in your business, then it signifies you have a higher risk in your business. Okay, because debt also involves a fixed obligation of repayment and interest, right?
Yes.
So lower the better. Okay,
Yes.
this ratio is lower the better. Okay, let's read if we have something else to say. Just one thing that we had not written here, that this ratio is shown in pure ratio format. Okay, like 2:1 kind of. Clear? Shall we proceed further now, Ayushi?
Yes, ma'am.
All right. So our next ratio is fixed asset turnover ratio. This is the actually one of a very good ratio, means not good, kind of actually very useful ratio. Okay. I had used this ratio in the practical life a lot. So fixed asset turnover ratio. All the activity ratios have a same pattern. I had taught you that. Is that correct, Ayushi? Can you make the formula for this fixed asset turnover ratio? Looking at the name. All, can you, Ayushi?
Ma'am.
I'm asking you, can you make the formula looking into the name of the formula? It is an activity ratio and all the activity ratio have a pattern, that how we write the formula. Do you remember that?
No, ma'am.
You don't remember? Ayushi, you have your pre-boards coming. All right, now come here. The name is saying fixed asset turnover ratio. In all the turnover ratio, our numerator always includes either the net sales turnover or anything equivalent to the item related to the denominator. Okay, and what comes in the denominator? In the denominator comes the first name of the ratio. So in the ratio, our first name is given as fixed asset, so our denominator will be fixed asset. Okay, average fixed asset, actually usually we, okay, just come here. Yes, average fixed asset. All right, our denominator will be average fixed asset and our numerator will be net sales only. And this ratio will be calculated as as other activity ratios. This ratio is also, it is shown in times format, 4 times, 5 times, like this. Okay, this ratio shows how many times of the average fixed asset the sales have been generated. That means it shows how efficiently the fixed asset have been used. All right, so let's say if there are two organizations, both have, let's say, 1 lakh rupees of fixed asset. All right, and if one company is generating 5 lakh rupees of sales and another one is generating 4 lakh rupees of sales by using the same amount of fixed asset, what will you say, Ayushi? Which company, which organization is performing better? Can you hear me, Ayushi? Am I audible to you?
Yes, ma'am.
Okay, I'm saying there are two companies. Both the companies have same value of fixed asset, 1 lakh, 1 lakh, but one company is generating 5 lakh rupees of turnover and the other company is generating 4 lakh rupees of turnover. Which company is performing better?
Ma'am, first one.
Correct, because by using the same amount of fixed asset, okay, one company is generating higher value of sales. So is it very useful ratio?
Yes, ma'am.
All right. So, well, we will write it down for your reference that net sales or revenue from operations is equals to gross sales minus sales return. Okay,
Yes, ma'am.
and
Ma'am, in denominator it comes average fixed asset or just net fixed asset?
well, in your book it is written net fixed asset, but usually we always take average fixed assets. Okay. If in question they had not given you, we already know if we can't calculate the average part, then we don't take the average, we take the closing balance only as the average and we calculate it. All right. But here they have not given, so, but if in question you can find, you can calculate average fixed asset. So I think it is advisable to do the average fixed asset. Okay. So since NCRT is saying net fixed asset, so we'll take it net fixed asset. All right. In the higher studies, you will find it out that we do the average fixed asset. But now we will follow the board. Okay. So net fixed asset is equals to gross fixed asset. And what we will minus here? To make it net, what we will do, Ayushi?
On depreciation.
Very good. Depreciation. All right. So, well, I think we did cover it, its format, its significance. So, okay, one thing we had not written. So it is higher the better. Higher the better. Right, Ayushi? Ratio is higher the better. Okay. Now, last ratio. Net asset turnover ratio. So, again, our formula will be revenue from operations or net sales. Both are correct. And in the denominator, we are going to write capital employed. So you can see this ratio is combination of the first two ratios that we had studied today. Can you, Ayushi?
Ma'am.
So our numerator will be same and our denominator will be also same from our first formula. So I'm going to just copy paste down here. And the significance will be quite similar to what we had done in our fixed asset turnover ratio. It is shown in times format only since it's an activity ratio. Now this ratio shows how many times of the capital employed the sales have been generated. So on the fixed asset turnover ratio, we were evaluating the efficiency, that with how much efficiency we are using our fixed asset, and here we are analyzing with how much capacity, how much efficiency we are utilizing our capital employed. Okay, Ayushi?
Yes, ma'am.
Even we can compare our last year financial and this year financial, and we can see last year we have this much of capital employed and we had achieved this much of turnover. Okay, so if our turnover, if our ratio has increased, that means our efficiency has increased. Is that correct? If last year my capital employed ratio was 5 times and this time it is 7 times, so that means my efficiency have been increased. Is that right?
Yes, ma'am.
And vice versa, if let's say last year we have 5 times and this year it fallen down to 4 times, so that means our efficiency has decreased, right? On the time when I had taught you this activity ratios, I had explained you that the activity ratio actually lets you helps you in evaluating that what exactly or how efficiently you are running the business. So after studying all the ratios, the inventory turnover ratio, uh, uh, what are the other ratios, Ayushi? Trade receivable turnover ratio, trade payable turnover ratio, working capital turnover ratio, fixed asset turnover ratio, net asset turnover ratio, all these ratios that we studied. Can you actually now see that how we are evaluating whether we are working efficiently or not? How efficiently the capital employed have been used. All right. So here our question is our part is completed. Okay. Do you